To share key levels to watch is Paul Ciana of BofA. He's BofA's head of FIC and equity technical research. Paul, it's good to see you.
Thank you, Mike. Good to be back. Thanks for having me.
Start kind of with a wide frame here on the S&P 500. I knew you guys had a summer rally target of 6,500. We basically got there
pretty much
at the highs this month. We're chopping around. People talk about seasonal weakness. What do you think the market is undergoing right here?
Sure. When we look at the S&P 500 technicals, right, there's a few concerns. One is some of that seasonal weakness that comes into September, but also some of the oscillator divergences. So the rally into almost 6,500 slowed down, according to momentum and trending indicators. So in August, what we had recommended was trying to hedge S&P longs while we're hitting new all-time highs. And we still like that view. Okay,
so at this point, it's a matter of staying in the market, but maybe being attentive to protecting some downside?
Yes.
What would tell you that this phase is more than a routine pullback? Like, where would the S&P have to fall to for you to say, okay, different trend now?
Yeah. S&P 500 in round numbers, we're in a range between 6,200 to 6,500. I think if we're breaking 6,200, which was a key low about 6 weeks ago or so, then we could be in a deeper decline in a worse scenario.
Okay.
But until then, you know, it looks more range-bound, consolidatory than it does look mega bearish.
And then just in terms of the parts of the market that were the most stretched, right, whether it's the NASDAQ 100 or something like that, is there more to give back?
Probably.
Yeah.
You know, I think one way to look at the equity market is in order for the rally to keep going, we need rotation, we need breadth, and we need some really simple breakouts. It's really disappointing to see that the Dow Jones Industrial Average still is not through 45,000.
Yeah.
You see it up on your board
struggling
there.
under
We're just sitting right near that. So without the big cap blue chip stocks joining the rally, we're not really going to push that much further, broadly speaking.
Yeah, I guess the Dow first touched 45,000 like in December or something. So it's been a while.
Yeah.
Let's talk about the 10-year Treasury yield. Broadly speaking, pretty range-bound, but where do you see it potentially heading from here?
I would say we're tactically bullish Treasuries, cyclically bullish Treasuries, but secularly bearish.
Okay.
So what we've been telling clients is that we think 10-year yield in the shorter term probably gets down to about 4.05%. We like buying it here at about 4.3. We just don't want to see the high on non-farm payrolls day back on August 1st of 4.4% broken.
Okay.
Right? Because that particular candle is really the control in the chart. We know that was a bullish day and a bullish view, and we're trying to continue with that in the short term.
Right, bullish day for Treasuries, obviously.
Yes.
So if we were to go much lower on Treasury yield, that's probably not a great signal for the economy. Maybe we shouldn't celebrate that. Or?
It could be.
Yeah.
You know what? There's a lot of different ways to slice this. Lower yields could support the tech narrative, right? Which may allow something like the Dow to break 45,000 finally. So
quickly, platinum. What's it doing in relative to gold? Yeah.
You know, gold has been stuck in a range for 6 months, right? And I think if you ignore some of these mega charts that have ranges on them, you can find other charts that are going to break out and start trending. And platinum was one of those that we recommended buying platinum back near 1,000.
Okay.
It had some big breakouts, and it's dipping now. And we like to say, buy the dip and get ready for the rip.